Are you looking for a real estate investing strategy effective for the next 6 to 12 months? If there's an investing formula superior to wholesaling or rehabbing and better than landlording, well, there is. One of our sponsors has been an investor for over 20 years. He's been through it all, up and down markets. This is not new to him. But listen to this. He's offering an investing how-to kit for free to our listeners for a limited time. So go to unlimitedfundingkit.com and get your free kit to start investing without a credit check or large down payment. This information is not common knowledge. It reveals how to have virtually unlimited funding for your deals based on a technique very, very few investors know about. Guys, this is not common knowledge. So be one of the few and get the Unlimited Funding Kit by going to their website at unlimitedfundingkit.com. Again, the kit is free, just a few bucks for shipping. So head over and get your kit, unlimitedfundingkit.com.
Welcome to Underground Wealth Secrets, hosted by Julie Houston on behalf of Bob and Ed Diamond. This is your friendly guide on leveling up your business, achieving financial freedom, and changing people's lives. This is for serious players who want to surpass their current stage and move the needle further. Tune in to get practical advice and eye-opening stories of industry leaders across the nation, teaching you how to scale your business with a strong financial mindset and true to your core values. Let's get this discussion started with your one and only host, Julie Houston.
Hey everybody, this is your host, Julie Houston with Underground Wealth Secrets podcast on behalf of Bob and Ed Diamond. And today I'm actually super excited to talk to our guest. I invest myself a little bit, and this is a conversation that I'm very excited to have, and I'm very honored to have with us today. Jay Conner, welcome to Underground Wealth Secrets. So excited to have you.
Well, thank you, Julie, and thank you so much for having me on. I'm so excited to be here to talk about my very most passionate subject, which is private money, how to get a lot of private money for your real estate deals. Always bring home a big check when you buy, use none of your own money, never miss out on a deal, and make your own rules and sit in the driver's seat and create your own destiny.
Wow. This is going to be good. Jay is going to be pulling back the curtain with us today. He is the private money expert, and I am excited to learn what he's going to share. But before we dive in, Jay, do you mind giving our viewers just a little bit of your background and a little bit about who you are?
Sure. Well, my wife, Carol Joy, and I, we live right here in Eastern North Carolina in a really small town called Morehead City, North Carolina. Population 8,000 people. Our total target market is only 40,000 people. We do 2 to 3 deals a month. Mostly what we do are single family houses. Of course, private money works for any kind of real estate deal, but our focus is single family houses. We don't do that many deals. We do 2 to 3 a month, but listen to this. By using private money, our average profit per single family house is $78,000 right now. $78,000 using private money. 2 to 3 deals a month, run the math. That math works out okay. So we've been full-time investing in single-family houses here in Eastern North Carolina since 2003, full-time. Well, from 2003 to 2009, the first 6 years, Julie, that we were in the business, I relied on the local bank and mortgage companies to fund my deals. Well, in January 2009, I remember it like it was yesterday, Julie. I was sitting here at my desk. I picked up the phone and called my banker. Believe it or not, we still have landlines here in North Carolina with cords that are attached, to these things called handsets, right?
So I don't have one of those.
So I picked up my telephone and I called my banker. And I had done a ton of deals with Steve, my banker, the first 6 years. And I had these 2 deals under contract representing over $100,000 in profit. I tell Steve about the deals. I learned my line of credit has been shut down with no notice. I didn't know there was a financial global crisis going on. And now I got a crisis, right? I got these 2 deals under contract and no way to fund them. Julie, my definition of coincidence is God's way of staying anonymous. In less than 2 weeks of being cut off from the bank, I learned about private money. I'd never heard of it before. I learned about private money, private lending, self-directed IRAs, and in less than 90 days, I was able to raise $2,150,000 in private money. And you know what, Julie? Since that time, I've never missed out on a deal for not having the money. And you know what? It was the biggest blessing in disguise I've ever had in my real estate business. This was during the market to where there was foreclosures everywhere, and you had to have the cash to buy these deals. And you know what? Our business, Carol Joy's and my business, tripled the first 12 months of being cut off from the banks. You know why this was? And we had a record year in that kind of market. And I tell you, this was the biggest blessing in disguise. And you know what? If it hadn't have been for that blessing in disguise of losing my line of credit at the bank, you and I wouldn't be here today having this conversation about private money. I mean, how many times have you been through something in your life? You look back and you went through it and you said, you know what? Life is better today. Since I had to go through that, I had to figure out a better way and a quicker way to fund my deals. So talk about transforming. Growth takes place in the valley. Growth doesn't take place on top of the mountain. And because of that experience and pushing through it, here we are today, Julie. I've never missed out on a deal since that time.
No.
And private money will rock your real estate investing business.
I couldn't agree with you more. I remember having conversations with people that were buying houses on credit cards when it was allowed years ago. I mean, that's how far back, I heard about this, but I got to ask, so you didn't get your line of credit and within 3 months you learned about private money and
2 weeks, 3 months, I had over $2 million in private money after getting it figured out.
So then what was the key to getting started?
Wow. So the key to getting started was getting my mind set right. Okay. Mm-hmm. That's the first step. That was the first step for me. That's the first step for anybody wanting to attract and raise private money. The first part of the mindset to get right when you're attracting private money, by the way, I'm not talking hard money. I'm talking private money. I'm talking about doing business with human beings, individuals like you and me, that use their liquid capital and or use their retirement funds to invest in our deals and loan us money. Then they can do that using their retirement funds tax-free or tax-deferred. That's why it's so important to learn about self-directed IRAs, which I did. So the first part of mindset, and here's a writer downer. Here's the writer downer. First step, you never ask for money. The money chases you. People ask me all the time, they say, Jay, how do you have $8.5 million right now in private money available to you from individuals to, fund your real estate deals, and you've never asked for money? That's the key right there, Julie. I've never asked anybody to fund a deal. I've never asked anybody to loan me private money. And they say, Jay, how do you do that? Here's the answer. Julie, I've never pitched a deal in my life. Right. I never pitched a deal. Well, here's the secret. Here's how you do it. First of all, do like I did and like I do now. Put on your teacher hat and teach people in your own network. That's one of the 3 categories of where you find private lenders. Teach people in your own network what private money is, what self-directed IRAs are, and how they can earn high rates of return safely and securely. I've got Carol Joy, my wife and I, we've got 45 private lenders right now funding our deals. Do you know what percentage of those people had ever heard of private money and private lending? Zero.
Zero.
Zero. None of them had ever heard of private money, private lending. And listen, here's an important point. Over half of them are using their retirement funds to fund their deals. And none of them had ever heard of self-directed IRAs and how they can use their retirement funds to earn unlimited money per year, either tax deferred or tax free. So I taught them how that works. So that's the first key. I'm not asking anybody for money. I'm teaching them my private lending program. Well, what private money is? Well, what in the world is my private lending program? Well, it's how much I pay. It's how often or how long the term is, how often we make payments. You know, Julie, here's another part of mindset. First step. The old traditional way of borrowing money for real estate is you go to the bank and you get on your hands and knees and you say, Miss Banker, Mr. Banker, please fund my deal. Please loan me money on my deal. And I did that the first 6 years. In this world of private money, having the right mindset, you're not begging, you're not chasing, you're not selling, you're not asking anybody for a mortgage, you're offering a mortgage. You're teaching them how to be a part of this program. Yeah. And so when I say so here's the deal. Never talk about a deal and your private lending program in the initial conversation. You sound like you're begging and you sound like you're desperate to start with without even trying it. So we teach them the program. Here's the program. Well, if they've got investment capital or retirement funds, they're in, because where else are they going to get these kind of returns safely and securely? So they tell me how much they have to loan, how much they have to work with, 200,000, whatever, 300,000, whatever it is. So here, back to the mindset, how do I get a deal funded without ever asking anybody for the money? I tell them what to do. And here's how it works. They've already told me how much money they got. They love the program. They're waiting for the phone call. I got a deal to fund, Julie. I don't call them up and say, hey, I got this house in Morehead City. Do you want to fund the deal? That's the most stupid question in the world I could ask. I call them up, and here's the script. If you're taking notes, you're listening to this show, here's the script. I call them up. I say, I've got great news for you. This is after a little chit chat, blah, 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 blah. Now, I got great news for you. I can now put your money to work. They've been waiting for the phone call. I can now put your money to work. And here I tell them 4 things. I got a house in Newport. Notice I just told them where it's located. I didn't give them the address. They could care less. I got a house in Newport. Secondly, it's got an after repaired value of $200,000. The funding required, third fact, the funding requires $150,000. I know the private lender's got $150,000. They already told me. The funding requires $150,000, and the closing is next Thursday. You'll need to have your funds wired to my real estate attorney next Wednesday for the closing. I'm going to email you the wiring instructions. End of conversation, right? I mean, they've been waiting for the phone call. They've been waiting for the phone call. I've got them good news. I didn't tell them the purchase price. They could care less. I didn't tell them the physical address. They could care less. They want their money to be put to work. And after that first deal, all they want to know is how much and when.
Yeah. Wow.
So how does that happen? That was a long answer to a short question. What's the first step on raising that money? Getting your mindset right on teaching people and serving them. You know, I hear all the time from people that are new real estate investors, who in the world is going to loan me money? And I've never done a deal. I've never done my first real estate deal. Who's going to loan me money? Well, here's the answer, and it's a writer downer. If you don't pay them, the property does. In other words, you're not going to borrow unsecured funds. Don't borrow more than 75% of the after repaired value. I didn't say 75% of the purchase price, 75% of the after repaired value. Bring home a big check. Who wants to get paid, right? I always borrow more than I need. So anyway, back to the mindset. You're not chasing, you're not begging, you're not selling. You're offering people an opportunity to get high rates of return safely and securely. Now, what's the next step? You got to know your program, right? You got to know Well, what interest rate are you going to pay? Right? What, by the way, I'm paying 8% right now. So I'm paying all my private lenders 8%. So what percentage? There's never any fees. There's no origination fees. It never comes up in conversation. So why should I bring it up? Right? So there's no points, right? So you know your program, right? The maximum loan to value. So you teach them the program. By the way, if you don't know what your private lending program is, don't worry, I got you covered. I got it in my new private money guide. I'll teach you my program. You can duplicate it. And so teach them your program. They tell you how much they got to work with. Do they have retirement funds? Here's an actionable item you want to write down. I'm on a roll now, Julie. So
I know.
here's an actionable item you want to write down. You must establish a relationship with a self-directed IRA company. Why? Because when you're talking to a new potential private lender in your network, by the way, there's two other categories where you find private lenders, but when you're talking to someone in your network and you find out they have retirement funds, and they're not happy with the returns, they hate the volatility of the stock market. Now you can introduce them to your representative at the self-directed IRA company. If you don't have that relationship in place, you're going to miss out on over half of the funding. So again, it's all about teaching them, finding out, do they have investment capital, retirement funds, and they tell you what they got. Now go find a deal just as soon as possible.
Wow. I can tell you that's not how I've raised private money. This is like unbelievable. You're kind of becoming the expert. So I understand that you can receive multiple checks on transactions, if I'm not mistaken. How does that work?
Well, here's the deal. So when I was borrowing money from the banks and not using private money, I only got a check one time. And the check I got, and I had to take, I'm like writing checks, right? All the time, traditionally. And the only check I got was when I sold the property. Okay.
Okay.
So in this world of private money, you're going to get at least two checks, maybe more. I'll show you how. The first check you're going to get is when you buy the property, and you're not going to take any of your own money to the closing table. That's why and how private money is really always, as far as you're concerned, a no down payment deal, meaning you ain't pulling any money out of your pocket. So let me give you a specific example as to how that works all the time with every one of my deals. So let me give you some numbers. Let's say that I'm looking to buy a house. I'm going to use small numbers because it's just easy to keep up with it in concept. So let's say that I got a house that I want to buy. Let's say there's a house you want to buy, Julie. Let's bring this home to you, Julie. There's a house you want to buy in small town America.
Yep.
And it's got an after repaired value of $200,000. Now, for you that's listening from California, I know you can't even buy an outhouse for $200,000. I get it, but just follow me on the math. So Julie is wanting to buy this house in small town America with an after repaired value of $200,000. Now, let's say that there's a rehab involved. There's a renovations involved. And I will tell you, your largest profits are going to come when renovation is involved. By the way, Julie, let's put our scenario here just on a quick little peg. I want to make a really, really important point right here, because I don't want anybody to miss out. Private money is not just for the ugly house business. Private money is just not for rehabbing. Let me tell you what private money is for. Private money, getting money from individuals, is for when you got a deal, whether it's a house, small apartments, whatever it is, land, if you're into land, whatever. Private money is for when the seller of the property requires all the cash, period. If it's a pretty house that needs no rehab, if it's an ugly house that needs a lot of rehab, there's two kinds of renovations. There's rent ovation And then there's renovation, if you're going to like put it in the multiple listing service, right? Right. So here's the deal. I've got some good friends that are coaches in the real estate investing space. And they say, you don't need private money for the pretty house business, right? Well, what about, here's my statistics, Julie, and I'm going to come back to your $200,000 house here in a minute and getting multiple checks. But so here's my statistics. I have reviewed since 2003. We've been full time since 2003. I've reviewed thousands and thousands, and you have too, Julie, of property lead sheets from sellers. Here's my stats. 13% of FSBOs, that's off-market houses, not in the multiple listing service, 13% will sell to me creatively. And I'm pretty good when it comes to negotiating. 13% will sell to me either subject to the existing note, where they leave the mortgage in their name, I make the payments, or they'll, 13% of those FSBOs will sell to me with seller financing, something creative.
Yeah.
But what do the other 87% of those FSBOs require? All the money.
The money.
They require the cash. I bought a house. I'm coming back to your $200,000 house.
I'm like, what's happening with my little house?
I know, it's like, I'm coming to it. So recently, Carol Joy and I bought this house in Newport, North Carolina, right next to Morrid Sea. After repaired value, $240,000. Free and clear. The seller says, I want me $95,000. $95,000. And the rehab on it, I mean, it didn't have any floor covering. They like sort of started it, but the rehab was only $30,000. Not a big rehab. I negotiated as strong as I could to buy that house on terms, which meant I wanted the seller to take it back a note. I want to buy it on terms. I want to make monthly payments, give them either no down payment or a little bit down payment. Mm-hmm. I even offered a $30,000 down payment. You know what the seller said to me? Give me all the money or no deal. All the money or no deal. Well, guess what? If I hadn't had private money on that house, I would have missed out.
Yeah.
Right. I would have missed out on that deal. So private money is not for major rehab deals only. It's any time, even if you ain't got to do nothing to the house. If the seller requires all the cash, private money. Now back to your $200,000 house. How are you going to get multiple checks on every deal? Here's the deal. You got an after repaired value. So you got a $200,000 after repaired value house.
Okay.
Now, that's fact number one. I'm going to show you how you're going to bring home a big check when you buy and take none of your own money to the closing table. Right. So you got a $200,000 ARV. That's what we call it in the business. ARV, ARV, which stands for after repaired value, which means the value of that house is going to be $200,000 when it's ready for Southern Living magazine pictures. Okay.
Yes.
Now, second fact, it needs $35,000 in rehab. The seller is motivated. It's an inherited piece of property. They want nothing to do with it. They just want to cash out, and it is free and clear with no mortgage. Mm-hmm. I'm going to buy that house for $100,000. I buy them all the time at 50% of ARV all the time. When there's
Is that your normal rate, typically 50% of the ARV?
If I've got a rehab that's, in that $35,000 range, I buy them all the time at 50% or even less than the after repaired value. Well, that seller is going to get $100,000 free and clear. It's an inherited property. That's like $100,000. And look, they ain't going to put no money in it, right? No. They can't put it in the multiple listing service because nobody in the multiple listing service is going to buy it because it needs some renovation, right? So I buy it for $100,000. Follow me on the math. I borrow up to 75% of the after repaired value. So the after repaired value is $200,000.
Yeah.
75% of the after repaired value is $150,000. So I can borrow $150,000 to buy that house. I'm buying it for 100,000. So I got 150,000 wired.
So the excess money comes to you.
Yes, exactly. So I'm bringing home a $50,000 check, less closing cost, closing cost. So I'm bringing home $45,000 when I buy this house, and I took none of my own money. And they say, Jay, who in their right mind would fund $150,000 and let you bring home 50,000 or 45,000 and trust you to rehab that house and not go to the Caribbean with that money, right?
You pay them every month like clockwork.
Of course. I mean, so these private lenders, I mean, so trust, of course, comes into this factor, but you take care of your private lenders. Well, guess what? Let's say I did go to the Caribbean and took that 45 grand with me.
Mm-hmm.
The private lenders got a deed of trust. I'm not borrowing unsecured money. So they just got a $200,000 house for the 150 that they loaned. Now they got to put 30 in it. So they're still made whole. They don't want to mess with it. They just want to get their interest. But that's why you are protecting your private lender. So back to the scenario, $200,000 ARV. I borrowed 150. I bring home a $45,000 check after closing. I'm going to use $35,000 of that check to rehab the house. I still got 10 grand left over for carrying costs. Check this out. Let's say
your time too, right? For finding the property.
Sure.
You have to account for your time that you look finding the property, negotiating the deal.
Exactly. And guess what? I let my private lenders decide if they need or want monthly payments or quarterly payments. You know, we can structure the deal to where they don't even get any payments until we cash out. I leave it up to the private lender. Well, let me ask you a question, Julie. If the private lender needs monthly payments and I'm bringing home a $45,000 check, whose money am I using to initially make their monthly payments?
Their money.
Their money.
Their money.
I mean, does this not get any better? I'm bringing home a huge check. Now, listen, I'm not going to bring home a huge check unless I'm going to do renovations with it. I mean, I don't want to pay interest on that money unless I'm going to be using it for rehab, but I want the extra money to come along. So I got that $45,000 or $50,000 check when I bought. Now let's go to selling. I'm going to sell it for $200,000. I still get another big check. So I accrue interest at principal only. So I'm still going to owe $150,000 that I borrowed. I've been making, let's say, the interest payments or whatever. And so now I sell it for $200,000. I still owe the private lender $150,000. How big is my check when I sold that property? $50,000 less closing costs, less any accrued interest that I owed the private lender that they hadn't been paid. So let's say I only bring home $45,000 of that second check. Now, remember that first check of the $45,000, 35 of that was rehab. So I spent 35 of that. I got 10 left. Well, add 10 to the 45 that I brought home. Do you see how I made $55,000 on that deal? Now, let's be transparent. I got to subtract from that realtor fees. So if I sold it through the MLS for $200,000, I'm going to pay my realtor 5%, which is 10 grand. So 10,000 comes out of that. I still made, $35,000 after realtor fees, after carrying costs, and never took any of my own money to the closing table. I've never wholesaled a deal in my life. I got great
Me neither.
Friends.
I've never done a wholesale deal. I don't know how to wholesale. I've never wholesaled a deal.
Yeah. And it's like, well, they say, Jay, why don't you wholesale? Well, I got a couple of reasons. Number one, my average profit is $78,000 on staying in deals. So I just like $78,000 better than $7,800 wholesale fee, right?
Yeah.
My second reason is I ain't got nobody to wholesale it to in my little area. I'm it.
Right? Me too. I live in the middle of nowhere. I live in the middle of the country. One stoplight in my town and a population of 800.
Woo! I like your area.
I have a whole cattle farm along the backside of my property. I love it. Love it.
Love it, love it, love it. So, private money allows you to create the business that you want, really. It allows you to create the
Yeah.
business you want. You don't miss out on any deals. I got a problem. Prior to COVID, Julie, it's a good problem, by the way, but prior to COVID, there was $18 trillion available in cash sitting on the sidelines that people could use for private money to loan out. Today, on this side of COVID, and this statistic is only 2 months old, so this is a recent statistic, $31 trillion in cash sitting that could be used as private money just right here in the United States. And I'm telling you, people don't know what to do with their money. Is the stock market a wreck?
True.
Talk about volatile, and
especially in this economy, having some type of assurance with your finances is probably one of the most smartest moves anybody could do right now.
Exactly. And, people are scared. People are looking for something safe and secure. And look, it's your moral and ethical responsibility to get the word out and let people know how they can safely and securely, don't borrow unsecured funds. You can legally, but don't do it. Give your lender the mortgage or a deed of trust to secure the note. Of course, if you're doing multifamily apartments, you're going to do syndication. That's another conversation, but it's all the same money, right? It's all the same money.
So I got to ask, is there any bad time to not raise private money?
I can tell you the worst time to try to raise private money.
What's
The worst time to raise private money is when you need it for a deal. Right? Here's the deal. Give birth to private money. What in the world do I mean by that? Give birth to private money. So I never had a baby. I'll never have a baby. But I know people that have babies. That's all they can talk about. They show pictures of their baby. They talk about their baby. They tell you how much the baby weighed, how tall the baby has all 10 fingers. If you're a granddaddy or grandmama, that's all you can talk about is your new grandbaby and how smart they are and how cute they are and how beautiful they are. And, that's all they can talk. Give birth to private money. What do you talk about? You talk about what you're excited about.
Mm-hmm.
So people ask me all the time, well, Jay, how in the world do I start a conversation?
That's what I was going to ask. How do you even start the conversation?
Well, here's a writer downer. My favorite way to start a conversation is with a question. And my favorite way to start a conversation is with 3 words. And these 3 words grab their attention like nothing else. And the 3 words are, did you know? Did you know? And people are wanting to know, well, what are you asking me? Did I know? Because I already know everything. What you going to ask me? Did I know? And here's the question. Did you know there's a way people can earn unlimited money per year tax-free? They never heard that question. And they never heard there's a way that people, see, I didn't say them, I said people. Did you know there's a way people can earn unlimited money per year tax-free? Of course, they're going to say no. And I say, well, I'm so excited to tell you. Let me tell you what it is. And then my next question is, I'm going to get them to say no again. People say, get them in the yes state, get them in the yes state. I don't want them in the yes state. I want them in the no state because I want them to I can tell you something, right? My second question is, have you ever heard of self-directed IRAs? Well, you got another no right there. Most people walking around ain't never heard of a self-directed IRA. So when they say, no, I didn't know there's a way people could earn unlimited amounts of money tax-free per year. No, I never heard about self-directed IRAs. Well, then you have your conversation about self-directed IRAs and how they work. Now, I know, Julie, you may have somebody listening to this show that doesn't know how to have that conversation. I got you covered. I got my private money guide. I'm going to give it away. we'll get you all fixed up on how to have that conversation. But that's how to start the conversation. I mean, isn't it pretty cool to start a conversation on a topic that people don't know anything about, but they would love to hear about it?
Mm-hmm.
You know, I mean,
Absolutely.
how many times do you go to a social event and the conversations are about as shallow as they could be and meaningless, and, you know, they go nowhere?
Mm-hmm.
So again, that's only one category where you find private lenders, and that's throughout your own, you know, social network.
And building relationships and really having a rapport with them and trust. I think that's a big factor for a lot of people.
Absolutely. Absolutely. The two other categories to find private lenders are, first of all, or second of all, existing private lenders, people that are already loaning money out to real estate investors. I'm not talking hard money, hard brokers. By the way, nothing against hard money, hard brokers. I got great friends that are hard money lenders. I say create as many relationships as you can with every funding source that's out there.
Mm-hmm.
But another place is existing individuals, existing private lenders. Where do you find them? Well, I'll tell you how I found them to start with. When I was first raising private money, I hired my real estate attorney's paralegal to search local public records right here in Carteret County, where Carol Joy and I live, looking for individuals on public record that had loaned money out secured by real estate, deeds of trust, mortgages, deeds of trust that have individuals' names, not LLCs, but individual names. Well, in 90 days, we only found 2 people. Got to be a quicker way.
Wow.
Got to be a quicker way than that. So I'm going to give you 2 resources right now on where to find existing private lend. 3. I'm going to give you 3.
Can I guess one of them?
Sure.
Maybe I shouldn't. I don't know if it'll be
No,
bad.
go for it. Go for it.
I was going to say, no, I don't know. Your doctors.
Okay, so your doctor.
I go to my doctors. My doctors lend me private money.
Absolutely. So your doctor, so any professional makes a great private lender, right? But they were not already loaning out private money until you probably told them about it, right?
Exactly. They wanted to invest, but they didn't want to deal with the hassle.
Exactly. So they are what we call in your warm market,
Yes.
But an existing private lender, I'll tell you one place you can find them. So first of all, retired people.
I was going to say retirement homes, and I thought that would be bad.
Well, retired people.
That was my guess.
Retired people have retirement funds, but where are retired people that are already private lenders? And you don't have to teach them about it. Where do you find retired people that are already loaning private money out? By the way, I'd much rather borrow money from people that I teach about it, because existing private lenders already know about it. And they already know the kind of interest rate that they like to get. But some of them are happy with 6 and 7%. And I don't try to talk them into 8. So let me tell you where they are. Did you know that 70% plus, 70% and more account holders of self-directed IRA accounts want to loan money to real estate investors? 70%.
That's
70%.
a lot.
70% of self-directed IRA account holders want to loan money to real estate investors because they don't want to do what we do. They don't want to go find the deal, negotiate the deal, buy the deal, oversee
Rehab the deal, manage
They just
everything.
want to be a real estate investor that sits back and does nothing except watch their account grow, right? They want passive. So self-directed IRA companies, particularly today with Zoom being so popular, every month, I mean, I know 2 self-directed IRA companies right now that every month have Zoom networking meetings that anybody can attend for free, And so they let you have breakout rooms in those Zooms, and you get to network on Zoom with self-directed IRA account holders wanting to loan money to you and you go hang out and meet and, at the Zoom and get to know each other and, do business together.
Yes.
Right.
Uh-huh.
There's a resource, right? So where else can you find existing private lenders? Well, those same self-directed IRA companies, they have in-person networking events as well. And then if you just want to sit back, the lazy woman, the lazy man way of doing it, then just plug into my private lender data feed. I update it. I don't update it. My software team updates it. I don't even know how to spell software, but my team of software developers, we update it every month. And Julie, we go out, my team, we get every private lender deal, every private lender note on public record. We get it in the data feed. We get it. It's all on public record. So we do public record skimming. This is one way to legally skim. It's public record.
Wow.
So we skim, we don't scam. We skim all the public records of mortgages and deeds of trust in the entire nation. And we get over 12,000 records a month of every private lender closing with the private lender's contact information and how much interest they're charging. My lands, if they're at 6%, I don't try to talk them into 8%. How much money they're loaning out, And so I'm sure you're asking, well, how do I get onto that private lender data feed? I got you covered in my private money guide. You'll learn all about it in there.
Yes, actually, for everything that Jay is talking about today that he's going over, you can find more information at undergroundwealthsecrets.net/private money. Not to cut you off, Jay, I just wanted to make sure everybody had that link, undergroundwealthsecrets.net/private money.
Awesome. So that's where you find private lenders, your own network. And another category, I teach people all the time. Sometimes real estate investors will say, well, everybody I know is broke. My people are broke. My people ain't got no money. Well, first of all, I don't believe them. Okay. I think there's this little F word that starts with a 4-letter word, starts with an F, and that's fear. They got fear going. And by the way, you can't be rejected in this world of private money if you don't ask nobody for money. Yeah, right? You teach them. You teach them what the program is. They tell you what they got, and you come back and you give them good news on the deal.
It's actually a service where you're offering to help people.
Absolutely.
Too. And it's really a nice perspective to hear and see it this way, because I have to say, for me personally, the way I was taught was way different. And this is really, really an amazing way and approach to really building your private money database and working with people.
Absolutely.
And helping people, especially today. Do you find that you have more of your lenders reaching out to you today, especially during the economy, because they want to make sure they're earning on their money?
Absolutely. I've got more private money in this economy chasing me than any other time. And here's a couple of reasons. Number one, believe it or not, did you know right now the national average certificate of deposit 12-month yield at the local bank is 0.97%? Now, a year ago, it was 0.17%, less than 0.25%. It's almost up to 1% now. But you come along and pay them 8 times more than they can get in the local bank. And the second reason is the stock market is, given their age, they may not live through a correction.
Wow.
So what they love, there's 3 big reasons our private lenders love to do business with us, Julie. The first reason is they're going to make a lot of money. Second reason is it's safe and secure. I've got a conservative loan to value that I already went over that we borrow. And it's secure. I'm not borrowing unsecured funds. And the third reason they love this program is because their principal loan amount, their investment with you, is not volatile. There's no fees, there's no commissions, and the value of their principal loan amount investment with you does not change. They don't have to worry about the value of their principal investment amount changing. It remains the same until cash out, and they know exactly what their rate of return is going to be.
Wow. I'm like speechless right now.
No. Well,
I'm like speechless.
that's saying something, Julie. That's
It
saying
is.
something.
It is. It was like, I've never really looked at it from this perspective. Like, I'm speechless.
Awesome. Well, as soon as you can start talking again, let's get to work and implement what you're learning.
I know, right? I'm like, I need to change the way I do things.
Well, I mean, you're the leader. It all comes down to how you're leading them,
Mhm.
and sometimes, real estate investors think they've got to pay that crazy thing like 10 or 11 or 12%. Well, once you do that with a private lender, they are spoiled for life. You
Yes,
try to
they
go from
are.
12% to 8%, you can forget that, right? So
I
if you've
mean, you
already,
might be able to like borrow from your cousin or your mom at 10% on your first deal
right,
and see how it goes. But like beyond that, I don't see it happening.
right.
I'm
Exactly.
sorry.
So, I mean, there's 3 C's to success. There's 3 C's to success in this world. Confidence, credibility, and connections. So confidence, how do you get, I mean, people do not want to do business with people unless they're confident in what they're doing. So know your formula on, your formula on how you buy a property. Know the private lending program that I'm going to share with you. Know it. Be confident about what you're talking about. People know and can feel if you're confident. Secondly, connections, right? So who are your connections? What kind of network have you got? If your network is like not good, then get involved in your community.
Yes.
Right? Get involved in your church, get involved in the Rotary Club, start serving with a servant's heart and start volunteering and grow your connections, because it's a cliche, unfortunately, but it's true.
It's
Your
true.
network equals or is a direct proportion to your net worth. So connections, and then credibility. Who's on your team? Who's your real estate attorney? Who's your CPA? Who's your realtor? Who's your general contractor? Who's your home inspector? Who's on your team that people can see that you have got a real business and you're just not messing around with some hobby.
That is very true. All of those things. And have a clear line of communication throughout the process, check in regularly. Do you do that?
Oh,
Of
yeah, I
course,
check in
right?
regularly. They get a check in the mail every month and they say, hey, Jay and Carol Joey loves me.
I once heard a story of a woman who would always refinance her house every year, and that's how she lived. And she would just she'd lend as private money and she'd refinance her house every single time she could, because she would
Awesome.
have more money for spending with the interest rate. I know, crazy.
There you go.
So everything that you covered, first of all, incredible value. You shared a lot of valuable information. And again, for our viewers, everything that we reviewed today, you can go to undergroundwealthsecrets.net/private money. And everything that we reviewed will be there. Before we close, Jay, do you have what would your advice be to anyone starting out, especially with the method that you do? What would your advice be for them in getting started? Or
so getting started as a real estate investor, getting started in private money,
getting started in private money and
So
really
where I
taking
would start, in addition to the mindset that we already covered, in addition to the mindset piece with that, in fact, it just might be a good idea, since I unpacked so much information, go back and listen to this show again.
I know it was a lot.
If you didn't take notes, go back and listen and have your notepad, right? But in addition to the mindset part, you're not asking for money, you're teaching people. The most important thing to start with is, and write this down, know your program backwards and forwards. Know your program. What do I mean by that? Know what interest rate you're paying. Know what's your criteria for buying a house. So if somebody asks you, well, how do you decide what you're going to buy a house? Then what is it? Know how often payments are going to be made. Quite frankly, I leave it up to the private lender. Know what your minimum amount is that you're going to accept. That'll be one of the first questions that you get from a new private lender. Well, what's the least amount I could start with? By the way, here's another writer downer. They always have more than they tell you.
So true.
They always have more. They always have more than they tell you, but they want to start. Well, when I started out, my minimum was $25,000. My minimum now is $50,000. My real estate attorney charges me the same thing to close a deal on a $50,000 note as a $500,000 note. Right?
Wow.
So know what your minimum is. Know what your geographical area of investment is. They may ask you, well, where are you investing? You need to know the answer to that question. Another important part about knowing your program, and your program, by the way, just should be mine. Duplicate it. Just duplicate my program, right? You should know ways to help people figure out where they can get money to invest with you. It's just not investment capital. It's not just retirement funds. Be prepared to talk to them about home equity lines. That's called arbitrage. If they have equity in real estate, they can go get a line of credit, loan the money out to you. You pay them a much higher rate of return than they pay the bank. And now they get to pocket the money. And that's an infinite rate of return. The reason it's an infinite rate of return for them, because you can't measure. They're loaning out the bank's money, not their own money. So that's another technique of arbitrage. So where's the best way to start? Know the private lending program backwards and forwards so you can teach it, be confident, and attract the money with no chasing, begging, or selling.
Jay, thank you so much. I mean, this was incredible. Again, for our viewers, everything we reviewed today, you can go to undergroundwealthsecrets.net/private money. This was incredible.
Awesome. And right there, Julie, at the website you gave out is my private money guide.
Yes.
That people can download for free. 7 reasons why private money will explode your real estate investing business and help you build incredible wealth. So I just finished writing it. This private money guide will get you on the fast track to getting all the private money you'd ever want for your real estate deals. It's free. Go to that link that Julie gave out. You can download it for free right now and get on the fast track to getting your own private money.
Thank you so much, Jay. It's been such an honor to have you on. Again, for the viewers, undergroundwealthsecrets.net/private money. It's been a pleasure. Thank you so much.
Thank you, Julie, for having me. God bless you.
Thank you for listening to this episode of Underground Wealth Secrets. May these nuggets of wisdom lead you to finally discovering your true potential. Become one of the most reliable businesses out there that's dedicated both to filling up your bank accounts and leaving a positive impact on your community. Get more informative and engaging conversations like this one at undergroundwealthsecrets.net. Don't forget to leave a positive rating and share with your friends. That's all for now. Until next time.